Hi everyone, I'm Nicola Mackenzie, co-founder here at Dun & McCarthy Mortgages, and in today's video I will be explaining to you what loan to value, also commonly referred to as LTV, what it means and why it's so important to understand it if you are looking to apply for a mortgage or a remortgage. So to find out more, stay tuned. Now, before we get into the detail of today's video, guys, can I ask you to hit that subscribe button and the notification bell if you've not already, so that you don't miss any future videos from the team here at DM Mortgages. Now, DM Mortgages do not monetize this channel, and the reason we do that is to give you guys the best viewing experience. So to show your support for the channel, when the time comes for you to arrange a mortgage or a remortgage, we would like you to head over to our website, which is dm.mortgage, and there you can book in for a free of charge mortgage consultation to look at your options. I should also mention that this video is one of an overall playlist that's dedicated to helping you to understand property deposits and to prepare you to buy a property. So make sure that you check out the rest of the videos in the playlist. First of all, let's look at what loan to value is. Now, loan to value is a phrase that when you start looking for a mortgage or a remortgage, you will become familiar with, because a lot of lenders use it to refer to the mortgage amount expressed as a percentage of the property's value. And that is exactly what loan to value is. So if you're buying a property, for example, that is £200,000, and let's say that you're looking to take out a mortgage against that property of £150,000, then your mortgage amount expressed as a percentage of the property's value would be 75%. So your loan to value in that example is 75%. And you'll also hear loan to value commonly referred to as LTV. So throughout this video, you might hear me refer to it as LTV, because that's kind of what we're used to in the mortgage world. Now, why it's important to understand LTV when you're mortgaging or remortgaging is because this is one of the factors that heavily influence how many lenders will actually potentially offer you a mortgage, and also it can be one of the biggest influencers when it comes to the interest rate that you achieve on your mortgage. Now, when you're going to take out a mortgage, a lot of buyers tend to refer to the percentage of deposit they're putting down. So you might be putting down a 5% deposit or a 10% deposit. But like I say, as far as mortgage lenders go, they will refer to it the other way, in terms of, rather than looking at how much deposit you're putting down, how much the mortgage amount is expressed, like I say, against the property's value. Now, generally speaking, the lower the loan to value is, then that is less risk to the lender, because the more you are contributing to the property, or the more equity you have built up in the property, then that leaves lower risk for the lender to take on. Hence why it gives you more options available when you come to look at mortgage options. Now, let's look at why LTV is so important. As I mentioned, it's one of the biggest influencers in terms of how many mortgage lenders may potentially offer you a mortgage. It's also one of the biggest influencers in terms of the interest rate that you'll be eligible for when you come to take out a mortgage or remortgage. Now, this also goes a lot deeper than that, because some lenders will only offer mortgages up to a certain maximum LTV. So for example, if you've got a less than perfect credit score, then you might only be eligible with certain lenders, specialist lenders. And often specialist lenders will have a maximum LTV. So they might say, we are only accepting applicants that have a loan to value of 85%, in other words, a 15% deposit. And if you don't have a 15% deposit, then you may not be eligible with that particular lender. Now, even though certain lenders might have a maximum loan to value and you need a certain amount of deposit to apply to that lender, the other implication where loan to value is concerned is that you might want to apply to a lender, but because of your individual circumstances, then that particular lender, even though they might go up to a maximum LTV of 95% for certain applicants, based on your credit score, they might say, we're only going to offer you a maximum of 85% LTV. or depending on the property type that you're purchasing. So for example, you could have a lender that does go up to 95% loan to value or 5% deposits, but because you're buying a flat, for example, for flats, that particular lender insists that you put in a 15% deposit. So in other words, they'll go up to a maximum loan to value of 85%. So it does get quite complex, but you just need to understand what loan to value means and that it can impact and influence on your mortgage options. Again, it's up to us as the professionals to work out your eligibility with the right lender for your circumstances. So I'd try not to overly worry about loan to value too much, but just understand the basic concept of it and work with a good broker like ourselves so that we can make sure that you're being put in the best position with the best lender to make sure that the loan to value that you might need for your circumstances is going to put you in the best position. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel, when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we searched thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now let's look at some of the factors that can affect loan to value. Now, going back to the beginning of the video, as I mentioned, the loan to value is the mortgage amount expressed as a percentage of the property's value. So of course, if you're doing a property or if you're doing renovations on a property, that is going to positively impact on the loan to value. Because let's say that you're buying a property that today's worth £300,000 and you're borrowing £225,000 against that property. So in other words, loan to value is 75%. Let's say that you do renovations on that property, so all of a sudden the value has increased now to £400,000. Then that would mean that your loan to value now sits at just above 56%. So again, that puts you in a lower loan to value bracket. So renovations are usually always a positive thing in terms of reducing your loan to value. Now, of course, an obvious one, another factor that's going to impact on the loan to value is the size of your deposit. The bigger your deposit, the lower the loan to value is, because the loan to value is the mortgage amount expressed as a percentage of the property's value. So the remainder would be your deposit or your equity if you've already purchased the property. Another common factor that can affect loan to value, I mentioned this earlier on, is your credit score, or at least, okay, so your credit score wouldn't necessarily affect the loan to value, but it may affect the loan to value that you are eligible to qualify for under mortgage lenders and products, as I mentioned. Because your credit score, the higher your credit score is, the lender will perceive you as lower risk. So therefore, you're going to qualify for more products and more lenders that are offering higher loan to value products. So for example, the minimum deposit that you need to buy property is going to be 5%. But in order to qualify for a 5% mortgage or 95% loan to value product, then really in the main, those kinds of mortgage lenders and products are generally offered to those that have very good credit scores. If you've had lots of CCJs and defaults, you're going to find it very, very difficult, if not impossible in some cases, not to get a mortgage, but certainly to get one using a 5% deposit or 95% loan to value. Now let's look at how loan to value impact on one of the most important factors when you're mortgaging or remortgaging, and of course this is the interest rate that you will obtain. Now, loan to value is a very important factor in terms of what interest rate you'll qualify for on your mortgage, and this is why I say it's really important that you understand it. The lower your loan to value is, generally speaking, the better interest rate that you will qualify for. Now, saying that, it's also not quite that straightforward, because how lenders look at it is they will give certain loan to value brackets for certain products. So we've been able to save clients sometimes thousands of pounds in some cases by just making sure that they're hitting the correct bracket in terms of loan to value to ensure that they're qualifying for the best rate. Now, what do I mean by that? Well, let's say that you're looking at buying a property for £300,000, and let's say that you've got a deposit of £29,700. That would mean that your loan to value is 90.1%. Now, the issue with that is that you're likely, depending on the lender, going to qualify for the same rates of interest as somebody that was getting a mortgage at 95% loan to value, so with a 5% deposit. But purely by putting an extra £300 and reaching the 90% loan to value bracket with that lender, that could then tip you into new product ranges, and that could save you a lot of money in interest. So lenders generally have different product ranges that apply to the different bracket of loan to value that you fall within. So it's really important that, again, when you come to see us for your mortgage, we're going to work with you to make sure that you're qualifying for the best loan to value bracket, because again, yes, the lower your loan to value is, generally speaking, the better. But again, you've also got to weigh up. So for example, if you, in that example, only have a 5% deposit, so that would mean that you're putting down £15,000 if you're purchasing at 300k. Then to get to the next bracket, you'd have to double the size of your deposit. So again, I'm not suggesting that trying to get into the next bracket with loan to value is always the best thing, because how long is it going to take you to save another £15,000? That could take years, and a lot could change in that time. But it's just a point that is worth being aware of, because if you're very close to the next bracket, then simply by putting a few £100s in some cases, that could qualify you for much better rates of interest. So in summary, guys, loan to value, a crucial point to understand when you take out a mortgage, because not only will it determine your eligibility with certain lenders and for certain products, it also can save you a lot of money, because generally the lower your loan to value, the more lenders will offer you a mortgage, and the better the rate of interest. Now, here at DM Mortgages, we are here to help you. We're really passionate about getting as many of you onto the property ladder or remortgage to improve your situation as we can. So if you are looking to take out a mortgage or consider reviewing an existing mortgage, then make sure that you head over to our website, which is dm.mortgage, and there you can book in for a free mortgage consultation with a fully qualified member of our mortgage advice team. And we do look at mortgage lenders from high street lenders to specialist lenders. We are representative of the whole of the market. So do make sure that you book in for a free mortgage appointment so that we can help you. Make sure that you subscribe and hit the notification bell if you haven't already, and also make sure that you check out the rest of the videos in this playlist, and I'll look forward to catching you in my next video.